Beijing says China's Communist Party actively tries to influence Americans through propaganda and economic coercion. And OPEC and its allies are making progress in talks on oil output cuts. That increases the chances that today's meeting can salvage a deal after failed negotiations earlier this week. One delegate tells Bloomberg discussions are now focusing on proposals for gradual easing of output cuts over several months. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. We're going to get through the data check quickly here to get to George Saravelis. I'm going to leave foreign exchange alone. We're going to kill that here in a moment. Futures -5. NASDAQ futures are green, 12,482 on the NASDAQ 100. That shows that tech resiliency with these record highs. The yield up higher earlier, 0.93%. Francine, I'm going to leave it to that so we can get to George.
Yeah, we'll get to George in a second. What I'm looking at the markets, Tom, is really quite, some movement when it comes to euro dollar, euro sterling. So I'm not sure it's the right way around where I wanted it, but this is, some of the things that we're looking out for. And it is really what expectations say about the event of failed talks between the UK and the EU, what that means for euro sterling with a move to the year-to-date high above 0.95, possibly soon to follow. I look at European assets overall, they're just off the month's highs because they're wondering what comes next and what will support them. Joining us now to talk about all of this is George Saravelis. He's Deutsche Bank Global Head of FX Research, and George, also one of the smartest but sometimes most controversial calls on FX. So thank you so much for joining us. There was, out of the blue, the French briefing people in Brussels saying that they're ready to use a veto if Michel Barnier concedes too much with the UK. What does that mean for euro sterling?
Good morning, Francine and Tom. Well, I think it ultimately depends on whether we can get a deal over the next few days. And it is worth remembering the French have been the most hawkish on Brexit over the last couple of years. Remember the days when we were negotiating these extensions of the negotiation, and the French were always threatening during the Theresa May premiership not to do so, but ultimately it happened. So I do think we need to take these threats with a bit of a grain of salt. The costs of not getting to a deal are very high for both sides, especially for the UK side. So our baseline is we do get there over the next few days, and if we do, we can finally take that risk off the table as well. But you're absolutely right, that's the critical risk for the next few days for the market.
But George, how much will euro pound, euro sterling appreciate in event of a no deal? And is a no deal scenario a 30% probability or 50?
I would say it's even lower than 30%. We think it's closer to 10-20%. That's about what the market is currently pricing. I think if we do get, precisely for that reason, because the risks of hard Brexit that are priced are low, if we do get a failure of negotiations, euro sterling could potentially head towards parity. So that would be a big move. It wouldn't just be the hard Brexit, it would be the risk of the unraveling of the withdrawal agreement as well. Because remember, the UK...
New short position opened for euro at 121.17.
Development indeed.
George, you reaffirmed today an extraordinary set of calls. I'm going to leave Aussie dollar out of this, but you reaffirmed 130 euro, 150 sterling. These are extraordinary moves. I want to introduce a chart right now, folks, and this is trade-weighted euro. And it's real simple. We're not above trend. It's all there is. We've broken out above one standard deviation on euro. It's just, well, we don't have a chart up right now. We'll get it up at some point. George, we're breaking out. When do Merkel and Lagarde scream?
Well, it's an interesting question because in some sense, I think that's already happened. If you remember back in September, the ECB very much elevated its language on FX, and that's because you had a big appreciation in the euro trade weighted in June and July. Now, the big difference this time is that the trade weighted is not going up as sharply. This is a broad-based dollar weakening move, and that has really been our call over the last 6 months, that it's a lot more about broad-based dollar weakness. And I think as long as that's the case, the ECB will find it more difficult to complain.
Okay, George, I don't mean to interrupt. I take your point on Lagarde. I understand Lagarde's politics here. But, George, your call is extraordinary. You've been absolutely dead on this. And this is going to come down to nations, as it always does. What do you anticipate to be the response of Germany and France out 122, 124, 126?
Well, not much, to be honest with you, Tom. I think if you take a step back and look at, for example, where purchasing power parity is, fair value in the euro, it's 125. Historically, the euro has been in a range of 120 to 130 for most of the time. What has been extraordinary is how weak it has been and how strong the dollar has been. So I think all that will happen over the next couple of years is an unwind of the excess dollar strength. The driver behind this dollar strength has been an unprecedented amount of uncertainty. If you think back to the last few years, we've had trade wars, we've had pandemics, we've had monetary tightening, and next year will be a very unusual year because it will be a very quiet year. We won't have as many headlines, and historically, when the world quiets down, the dollar tends to weaken.
But, George, I mean, and I understand this is a dollar story, but the trajectory of the euro must change depending on whether we get a recovery fund or not. I mean, after all, it changes everything for Europe. Will they, power ahead without Hungary and Poland? Is it bluffing? Like, how do you view that?
I'm going to place stop on profit for this one for euro at 121.15. Right.
Are excluded, but because they would lose out huge amounts of funding, this is 10% of GDP, I think it's very unlikely that we end up with that scenario and that they ultimately back down. And if you think about next year, this recovery fund money can be very positive for Europe, especially for Eastern Europe. The order of magnitude is 2 to 3 times as big as the Marshall Plan in terms of money that can go there. So we are very positive on the Eastern European region as well.
So what does that mean for currencies in Eastern Europe? Is there a pair that looks attractive at the moment?
So I think currencies like the Czech koruna, Poland, Hungary, you have a very good mix. I think Germany can do especially well next year. The labor protection, the revenue protection policies that were in place will make it very easy for Germany to switch back on, so to speak, after the crisis once the vaccines are rolled out. Very geared to the global manufacturing cycle. So if Germany does well, Eastern European currencies can do well. They will get the relief funds, the recovery funds money too. I think you could have substantial appreciation for all of the C3 currencies.
George, thank you so much. George Servelis there of Deutsche Bank stays with us. We'll talk a bit more about the emerging market currencies as well. Coming up in the next hour, Charles Cantor, Neuberger Berman, Senior Portfolio Manager, Long Short Fund. That's coming up in about 50 minutes from now, 6 a.m. in New York, 11 a.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg Surveillance. Good morning, everyone. Francine Laquan, Tom Keene in New York. Really interesting news flow today. We'll get to all that throughout the morning, but also on the markets, just really, really interesting correlations up against record highs in equities and NASDAQ 100 right now, green on the screen, with S&P futures at -5 in the early New York hours. The VIX 21.12. We are advantaged as you are this morning with George Saravelos of Deutsche Bank. He has called for weak dollar. He has called for strong euro. Some people think his calls 130 euro, 150 on pound sterling are outlandish, outrageous, and we're thrilled to have the outrageous one with us this morning. George, there's a point where this becomes stochastic. That's French, folks, for pointy. It becomes pointy, where there has to be a response. The ECB is an original invention. If we get there, what are the tools Lagarde will have available to force the dollar to reverse to strength?
Unfortunately, Tom, I think they ran out of tools. The one big tool they had was, of course, negative rates. And if you think back to the big euro decline from 140 all the way down to the 110s, that was when the ECB went negative while the rest of the world still had positive rates. But now everyone's joined them. The ECB is very close to the lower bound. What they could try and do is cut rates a bit further. They're at -50. Maybe they can take them to -50 or -60. Yeah. But I think if they do that, the euro could end up rallying.
Okay.
As soon as they cut rates, the market will realize they're done, and then it won't be very productive.
This is so important, folks, what we're listening to with Mr. Saravelos, because he's clearly drank the Folkers-Landau Kool-Aid. George, you're talking about the magnitude of negative interest rates. That's something the late Marvin Goodfriend talked about. Ken Rogoff has been just courageous on this as well. How do you affect the magnitude you're speaking to of a greater negative interest rate and keep commercial banking in Europe alive?
Well, I think at -50, you've been able to do it. But if you do try and go deeper, the issues will become more and more important, and in terms of negative implications. And it's something the ECB has been increasingly recognized. I think that's precisely why they're not going to cut rates over the next in the meeting over the next few weeks. So what's more likely is credit easing measures, more aggressive TLTRO. Of course, the PEP has been successful. But all these things, if they help European growth, they will help European equity inflow, and they'll help the euro. And I think the ECB could, in some sense, be okay with that, as long as the European economy is doing well. And I think next year, Germany especially can boom. They may be more tolerant of a high euro.
George, what happens to some of the periphery countries? So, you know, in Italy and Spain, if they don't get the recovery fund money, and if they don't, is there a danger that even if they get the money, actually they squander it without putting into projects that will deliver long-term growth?
So I think that's important. It's an important question, and part of why the negotiations were very difficult this year in terms of the recovery funds was because the northern countries asked for terms and conditions, so to speak, in terms of how they're used. So the process is fairly rigorous, which may mean it may take a bit longer to give the money, but I think the odds that they're used productively are higher than they would have been under different circumstances. And just the other point I would like to make is over the summer period, as the economies reopen, the South is, of course, very dependent on tourism. The potential for pent-up demand, a big rebound in tourism is very strong. And the market will find it very difficult to distinguish between the cyclical recovery and improvement and what the underlying steady state is. My point here, the cyclical recovery next year will be very, very strong, and I think the periphery will do quite well out of that as well.
When do investors start worrying about debt? And, do they start worrying about debt before in Europe, or does it hurt the U.S. first?
So I think one simple word, inflation. We only worry about debt when inflation comes back. I've always liked to use the example of Japan. Everyone's been worried about Japanese debt for the last 30 years. And you look at the debt to GDP ratios, they're above 200% of GDP. But because there's no inflation, what matters is the cost of servicing the debt and interest rates. I remain in the disinflationary camp. Even though growth will be strong next year, the output gap, the hole which we need to dig ourselves out of, so to speak, is very deep. If you take a look at the U.S. employment to population ratio, the broadest measure of the labor market, it's still worse than what it was at the peak of the 2008 financial crisis. So good growth, but no inflation and no worries around debt.
George, I understand the output gap dynamic there, but your disinflation idea is fascinating given what I see in five-year break-evens. The fact is, I'm looking at the screen now on the Bloomberg. It's too much for television. It's too much complexity this early in the morning. I'm looking at an inflationary vector in the United States, and I'm not there in Europe yet, but even Europe is giving me an elbow up to a higher guesstimate of inflation. When do you capitulate to an inflationary trend?
Well, for me, what's most important is the actual underlying inflation data in terms of what's coming out of the data releases. And the market drives inflation expectations higher because global growth is good. That's also helping our weaker dollar view. But in terms of thinking about a sustained return of inflation to 2%, I would need to see it in the data. I would need to see it in the labor market and in wages going up.
Right.
And I don't see that next year.
This has been hugely valuable. George Saravelos, my regards to your team. Again, a huge call there by Deutsche Bank on 130 strong euro, 150 strong pound sterling as well. We move from Mr. Saravelos to our conversation of the day. In the next hour, Jacob Lew, the former Treasury Secretary of the United States, arguably the most important conversation I've ever had with him. Jack Lew on stimulus and its urgency. This will be fascinating. Stay with us, green and red on the screen. This is Bloomberg. Good morning.
Welcome to That's Debatable, an interactive series on today's most pressing issues. This week's resolution, should we stop worrying about national deficits? We'll hear from both sides.
Every deficit is good for someone.
There will be automatic spending cuts if nothing is done.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. United Parcel Service is trying to keep from being overwhelmed by the holiday rush. UPS is temporarily restricting some packages it takes from big retailers such as Nike, Gap and LL Bean. The company says it's steering large customers to ship on days when volume isn't as heavy. The Australian bank Macquarie is expanding its asset management business in the US. Macquarie has agreed to buy Waddell & Reed Financial for $1.7 billion. The American company has $68 billion in assets under management. The deal will propel Macquarie into the top 25 actively managed, long-term, open-ended mutual fund managers. And one by one, the US dollar is dropping to multi-year lows against its peers. This week, the euro, the Canadian and Australian dollars and the Korean won have all hit their highest levels in more than 2 years. The Swiss franc is at its strongest against the dollar since 2015. Growing optimism about a US stimulus and the rollout of vaccines have hurt demand for the world's reserve currency. And that's your latest Bloomberg Business Flash. Tom?
Ritika, thanks so much.
Position closed on euro at 121.15.
Record deaths in America. In the financial markets, red and green on the screen, the VIX 21.11, the NASDAQ 100 giving me some green right now, but it's all fractional. On dollar, and thank you so much, George Saravellos, DXY indicating a weaker dollar fractionally, the euro 121 level. Francine will talk about sterling and its different permutations. I'd also note on the Pacific Rim, stronger Pacific Rim currencies. This has been an undertold story. That blended index, ADXY, the JP Morgan Bloomberg ADXY index, moves out to new strength today. Francine?
Yeah, Tom, there are probably 2 or 3 stories that I'm watching out for. So you're right that investors are focused on whether a Democratic call for immediate stimulus talks will support stocks related today. And then on pound, it has been fluctuating after France warned that it could veto a UK-European Union trade deal if it doesn't like the terms, something that actually took the markets a bit by surprise, which is why we're seeing not only sterling change, but actually euro sterling.